Hey everyone, welcome back to the Dinar Daily. We are tracking what might just be one of the most significant streams of discussion we've covered this entire year. A powerful wave of speculation is currently moving through the community, and it appears to be centered almost entirely on one specific name, Chase Bank. In recent days and weeks, reports and whispers have been circulating at an accelerated pace, all pointing toward conversations about a possible exchange limit being connected to the Iraqi dinar. If this chatter holds any weight, it could suggest that something substantial is being prepared behind the scenes. However, this is where the story gets a crucial twist. While many are observing this with heightened interest, there are simultaneous and equally strong warnings cautioning everyone to slow down, to wait, and to avoid any premature rush to financial institutions. Before anyone makes any decisions based on this speculation, it's vital to understand the full context. Today, we are going to break down this entire narrative. We'll look at what is reportedly happening at Chase Bank, what these rumored exchange limits might functionally mean, and explore the critical reasons why many are insisting that waiting could be the most prudent course of action. We will also examine how timing could fundamentally alter the outcome for individuals, if and when such an event were to go live. Over the past few days, the online chatter has intensified, with numerous discussions surfacing about Chase Bank's internal systems, LLEGEDLY showing new activity that involves the Iraqi dinar. According to a variety of discussions being shared across community forums, some people are claiming that the dinar has recently reappeared within Chase's live foreign currency listings, a development that is significant on its own. But this time, the currency is reportedly linked with a specific exchange cap, which is the detail fueling this new round of intense analysis. At first glance, a cap might not sound like a major development, but anyone who has been following this long journey understands the potential implications. When a major United States bank, especially one of the Big Four, begins to make operational preparations or system adjustments around a specific foreign currency, it is generally not considered a random occurrence. It typically implies that the institution is adjusting its framework for a reason. Whether that reason is for internal testing protocols, broad system-wide updates, or, as the speculation suggests, preparations for broader market activity, the key takeaway from these reports, regardless of the precise reason, is that something appears to be shifting inside the infrastructure of one of America's largest and most critical financial networks, and all of these reported shifts are connected to the Iraqi dinar. So, let's explore exactly why Chase Bank matters so much in this entire conversation. Chase is not just another local branch or a regional financial institution. It is one of the largest and most globally interconnected banks on the planet. It plays a major systemic role in coordination with the U.S. Treasury, facilitates countless international settlements, and runs massive foreign exchange operations every single day. Because of this central role in the global financial system, if a bank of this particular scale is, in fact, suddenly adding operational limits or adjusting its internal handling of the Iraqi dinar, it is viewed by many observers as a major clue. The interpretation is that the underlying infrastructure for a potential future exchange scenario is being quietly prepared, tested, or put in place. Think about it from a purely logistical and business standpoint. No major financial institution would waste valuable resources, programmer hours, or system capacity on programming limits, testing conversion systems, or listing a seldom exchanged currency in a live status unless it had a clear, real-world purpose. These kinds of internal updates, which cost time and money, simply do not happen for fun or without a strategic reason. They typically happen when a bank's risk management and operations departments expect potential movement or are directed to prepare for a new set of conditions. The activity itself, therefore, is what is drawing so much attention from the community as they try to interpret what these preparations signal for the future. Let's delve deeper into the specifics of what is being reported. According to the various reports and discussions being shared within the community, the so-called exchange limit at Chase might be set at approximately $1 million worth of currency per customer. It's important to stress that this number is part of the community chatter and could vary significantly, depending on the type of account a customer holds. For instance, some of the speculation suggests that private banking clients or high-net-worth wealth management clients might see much higher, or perhaps different thresholds. In contrast, regular retail account holders could potentially face stricter, lower limits. This tiered structure is a common practice in banking for managing services across different client levels. Whether or not these specific numbers are accurate, the idea itself, the very concept of a tiered limit system, makes complete sense from a financial control and risk management standpoint. If the dinar were to suddenly undergo a significant revaluation, banks would be legally and logistically required to manage the resulting liquidity with extreme care. This would mean controlling how much currency gets exchanged during the initial wave, primarily to prevent a systemic overload and to maintain economic stability for everyone involved. Therefore, instead of viewing these rumored limits as inherently bad news, many observers are interpreting them as a potential signal that the system is being prepared responsibly and methodically for whatever might be coming. In fact, there is a strong argument that these limits, if they are real, might not be a negative sign at all. On the contrary, they might be the most compelling evidence yet that the preparations are genuine. When banks establish caps, tiers, or other control systems, it is often because they are getting ready for real transactions, not theoretical ones. It's a logistical necessity. Think of it as a form of traffic control for a major highway opening. If every single dinar holder in America tried to run to the bank on the very first day, the resulting volume would overwhelm the system almost instantly, causing chaos, delays, and potential failures in verification. By setting clear limits, banks can carefully manage the flow of transactions. This controlled flow is essential for several reasons. It allows the bank to properly verify the authenticity of the currency being presented, which is a critical anti-fraud and compliance step. It also enables them to process the exchanges safely and securely without draining their own liquidity reserves too quickly. This protects not only the bank itself but also the customers and the broader economy from the shocks of a sudden, unmanaged surge in volume. These steps, therefore, are not necessarily meant to stop people from exchanging. They are meant to ensure that when it happens in an orderly, smooth, and secure fashion. And make no mistake, if Chase Bank is truly setting operational limits on the Iraqi dinar, it's because their internal system is, at some level, acknowledging the currency is active. But with all of this exciting speculation comes one very important and very loud warning. It is a warning that everyone following this topic should take seriously. Many experienced voices within the community, individuals who have tracked these developments for years, have been urgently stressing the need for patience. They have been stating very clearly that when or if a revaluation or a significant rate adjustment begins, the very first wave of exchanges might not reflect the final or true international rate. In simple terms, this means that being the absolute first person in line doesn't automatically mean you will get the best possible outcome. It's a crucial distinction that many are trying to highlight above the noise. The concern is that the initial exchange window could open with what is known as a transitional rate or a controlled introductory rate. This rate might be set internally by the banks or a government body before the currency is allowed to float or stabilize on the broader international market. If that scenario turns out to be true, those who rush to exchange their holdings without waiting for official confirmation or for the market to settle might inadvertently miss out on the higher, fully adjusted value that could become available later. The smarter move, according to these warnings, might actually be to wait until the rates stabilize and all official channels announce the confirmed final exchange structure. Timing, in this scenario, could make all the difference. Now, let's step back for a moment and look at the bigger picture. What is actually happening inside Iraq that might be fueling all of this external speculation? The Central Bank of Iraq has been rolling out a series of major, fundamental reforms over the past year. They have been working to upgrade their digital banking systems, tighten the rules surrounding money transfers, and significantly improve their anti-fraud and anti-money laundering protections. A key part of this process has been the push to align Iraq's entire payment infrastructure with international standards, such as ISO 20022, which is a necessary step for global integration. This modernization is not just cosmetic. It's a deep, structural overhaul of their financial system. On top of these technical upgrades, the Iraqi government and its central bank have signaled very clear intentions to make the Iraqi dinar the dominant currency for all domestic trade and, eventually, even regional trade. The goal is to move the local economy away from its heavy reliance on the US dollar for internal transactions. That shift alone, if successful, would be a massive step toward achieving long-term currency stability and, potentially, revaluation. These changes are not small, incremental tweaks. They are part of a broad, comprehensive modernization plan that is setting the stage for Iraq to fully integrate into the global financial system, with many of their public timelines pointing towards significant progress by 2025. As Iraq's government and its financial leaders continue to push forward with these reforms, major U.S. banks naturally have to prepare as well. It's a matter of synchronization. If Iraq's monetary framework becomes internationally active and compliant, the financial systems in the United States must be ready to handle the consequences. This includes processing conversions, ensuring regulatory compliance for all transactions, and managing the associated liquidity. Chase Bank, being a top-tier global player, would almost certainly be involved in that process at a high level. Their systems are already integrated to handle dozens of international currencies every single day, so adding another would be a matter of operational readiness. When you see updates mentioning the Iraqi dinar within their operational infrastructure, it is likely not a coincidence. It can be interpreted as preparation. The fact that these preparations appear to be happening now, according to these reports, aligns perfectly with Iraq's own public timeline for its monetary reform and its goals for international market integration in the near future. This apparent alignment is what many observers find so compelling. It's not just one side moving. It's a potential indication of a synchronized effort between Iraq's internal reforms and the external preparations of international banking partners. This synchronization is not a coincidence in the world of finance. It is often the result of direct coordination. So, what exactly does an exchange limit accomplish for a bank like Chase? The answer is simple: control and protection. When a new or revalued currency enters an active exchange status, volatility can spike and uncertainty is high. Banks have a responsibility to control cash flow, both for their own stability and for that of the entire system. They must be able to verify the authenticity of every single note, a process that takes time and resources, especially with a currency that has been out of wide circulation for so long. They also need to ensure they are not flooding their own systems with excessive volume too quickly. Limits help maintain this crucial balance and manage the operational risk involved. For example, if each customer can only exchange up to a certain dollar amount during the first phase, the bank can process those transactions gradually. This allows them to keep their reserves stable and avoid the massive liquidity swings that could be damaging. Once that initial surge of demand settles down and the systems are proven to be stable under the new conditions, those limits could then be lifted, expanded, or adjusted. In this way, the limits would act as a safety valve. They are not necessarily a blockade designed to stop you, but rather a management tool designed to ensure a smooth and orderly process for everyone involved, from the customer to the bank itself. But let's address the one big question that everyone keeps asking: does all of this chatter mean the revaluation is happening right now or tomorrow? The most honest and responsible answer is not necessarily. But what it does mean, if the reports are accurate, is that large and serious institutions appear to be preparing for something significant. The system updates themselves do not guarantee a specific date or a specific rate. However, they do confirm a state of readiness. It's very similar to seeing construction crews putting up brand new barricades and painting fresh lines on a highway that has been under construction. You may not know the exact opening day, but you know that the preparations are in their final stages. The same logic applies here. Chase Bank's reported internal system activity doesn't confirm an imminent revaluation, but it strongly suggests that operational testing and readiness protocols are being implemented for an event tied to foreign currency changes. It's a sign that the highway is being prepared to handle traffic. This development is significant because it moves the entire subject from the realm of pure theory into the realm of practical, operational logistics. Banks are, at their core, practical institutions. They prepare for things they believe have a reasonable chance of happening, and these reported preparations are a tangible sign of that belief. Here is another point that is well worth considering. Every time similar patterns have appeared in past years, times when major banks temporarily listed the IQD or their systems showed rate test entries, it was usually followed by tangible policy updates inside Iraq. Sometimes, this was a change in how currency was distributed. Other times, it was a new banking regulation or a digital upgrade announced by the central bank. We are seeing that exact same sequence play out right now. The pattern is repeating itself. Iraq updates its internal systems and announces reforms, and shortly thereafter, international banks reportedly react by adjusting their own systems. Speculation then rises as the community connects these dots. While this pattern doesn't mean that everything will happen overnight, it does show a clear, synchronized movement between different, independent parts of the global financial system. And synchronization, as we've noted, is rarely a coincidence in the world of high finance. It implies coordination. When central banks, national treasuries, and major private financial institutions all appear to be moving in the same rhythm, it strongly suggests that the groundwork is being laid for a significant policy shift. The current chatter about Chase Bank is simply the latest, and perhaps most specific, piece of evidence in that ongoing pattern of coordinated activity. So, given all this information, what should you, as a currency holder, be doing right now? The overwhelming consensus from the most cautious voices is to prepare intelligently, but do not panic. This is absolutely not the time to act on impulse or to make rash decisions based on unverified rumors. Instead, the focus should be on preparation. This means making sure your notes are secure, properly counted, and if possible, verified. Store them safely and keep a clear and organized record, perhaps even including serial numbers. If and when an official exchange process begins, all banks will require proper documentation and verification. And being organized ahead of time will save you hours of stress that you should also train yourself to stay alert for verified public announcements. When something of this significance truly occurs, it will be official. It will be public. It will be verifiable through multiple, credible mainstream news and financial sources. You will not have to rely on secret rumor posts or cryptic online messages to know that it is real. The information will be unavoidable. Patience right now is not just a smart virtue. It's a powerful strategic tool. Rushing into a situation based on incomplete information is how mistakes are made. Waiting for clarity and official direction is how you maintain control of your own situation. And don't forget, you may have multiple options when it comes to where and how to conduct an exchange, should that day come. While Chase Bank is currently in the spotlight of the speculation, other major financial institutions such as Wells Fargo, Bank of America, and Citibank could also participate in any future national or international rollout. It is likely a good idea to keep your banking relationships flexible. There is no need to move all your assets to one institution or make hasty choices based on the rumor of the day. Instead, focus on what you can control, your own preparation. Know your bank's ID requirements, check your current account setup, and understand what documentation might be needed for large transactions. The more prepared you are on a personal, logistical level, the smoother any potential process will be when the time finally comes. Remember, knowledge and preparation are your two best advantages in any financial situation. Many people are also asking, what if I missed the first exchange window? This is a common source of anxiety, but it's important to put it in perspective. Most historical currency reevaluations and monetary transitions have multiple phases. There is almost never just one single day or one single chance to participate. Banks and governments know that managing millions of transactions from millions of people takes time. That's why tiered systems and early limits exist. That is also why later phases typically open up once the initial system stabilizes. Being patient may even result in a better outcome. If the initial rates offered are, in fact, transitional or introductory, waiting could allow you to access a stronger, more stable market rate later on. The key is to avoid making decisions based on emotion, particularly the fear of missing out. The best approach is often to let the market breathe, let the official process unfold, and act only when you have complete clarity on the rules, the rates, and the procedures. A calm strategic decision is almost always better than a panicked, rushed one. Now let's zoom out and look at the global picture for just a moment. The world's financial systems are changing at a rapid pace. The rise of digital currencies, shifts in oil trade settlements, and various de-dollarization trends are all reshaping how nations handle value and conduct trade. Iraq sits right at the crossroads of this massive transformation. As they work to expand their oil partnerships beyond traditional markets and strengthen regional trade deals, having a strong, stable national currency becomes absolutely essential for their economic sovereignty. The dinar cannot remain undervalued indefinitely if Iraq truly wants to grow independently and reclaim its economic power. This global pressure is precisely why their internal reforms have accelerated. And it's also why international banks like Chase, according to these reports, are beginning to adjust their systems now. The entire world is shifting, and Iraq is positioning itself to be a key player in the middle of that shift. When a country starts building a financial identity that is strong enough to rival its decades-long dependence on the US dollar for its own domestic economy, it signals a brand new level of economic confidence and ambition. As Iraq continues to make these moves, global institutions are responding accordingly. That is why these updates, such as rumored exchange caps or new foreign currency settings inside major banks, are so fascinating to so many people. They show movement, they show coordination, and they show advanced planning. Remember, nothing in the world of international banking happens by accident. Every single system update, every new exchange limit, and every currency activation has a specific reason behind it. The timing of these reported activities right now suggests to many observers that the pieces are falling into place faster and more concretely than they have in a very long time. It is also worth noting that Iraq's own central bank recently confirmed that their new digital and international payment mechanisms are being fully tested ahead of new policy implementations. These tests, they stated, include coordination with international partners. Those international partners could and likely would involve major US and European banks. So, when we see reports emerging from the community about Chase's systems showing IQD activity, it aligns perfectly with what Iraq has already publicly announced: a period of increased international testing and readiness. The connection is clear. Iraq is upgrading its side of the bridge, and global institutions are, according to these reports, synchronizing on theirs. Now, we get to the part that matters most. What should you actually do if and when an exchange process officially begins? First, stay calm and verify everything. Make sure any official rate is publicly listed by multiple credible banks or international currency converters. Second, contact your own bank directly for clarity on their specific procedures. Third, avoid any third-party offers or private exchange promotions that promise faster service or better rates. These are often scams. Only trust official, regulated banking institutions. Fourth, don't feel pressured to exchange everything you hold immediately. If you hold a large amount, you might consider exchanging only a portion first to secure liquidity, and then wait for more data before exchanging the rest. Finally, document everything. Keep all receipts, rate confirmations, and transaction IDs. Let's also remember one fundamental truth: patience almost always pays off when it comes to markets. Whether you are dealing with stocks, real estate, or currencies, Rushing in during periods of high emotion and uncertainty rarely yields the best results. The same exact logic applies here. The first wave of excitement might bring temporary chaos and confusing information, but those who stay calm, informed, and patient are often the ones who come out ahead in the long run. Waiting does not mean missing out. It means watching carefully and moving strategically when the time is right and the picture is clear. So, if these Chase Bank updates are indeed true, see them for what they are: signals of preparation, not a call to panic. If we connect all the dots: Iraq's public reform timeline, the reported bank system updates, and the logic behind exchange limit reports, one thing becomes very clear. Something significant is being set up, quietly and methodically. It might not be tomorrow or even next week, but the foundation is being laid for what could be one of the most significant currency events in recent history. The question isn't if preparations are being made, but when they will be complete. And when that day arrives, those who are calm, prepared, and informed will be in the best position to benefit. Here is the final takeaway. The Chase Bank IQD limit story shouldn't worry you. It should prepare you. Limits, if real, mean organization. System updates mean readiness. And coordination between Iraq's internal reforms and the actions of global institutions means tangible progress. This is arguably the closest alignment we have seen in years, between local reform in Iraq and the readiness of international infrastructure. The smart move right now is to stay informed but not impulsive. Watch for official updates, stay connected to reliable news sources, and avoid the hype-driven speculation. The more grounded you remain, the stronger your position will be when the real moment arrives. Stay focused, stay patient, and stay ready.